I'm talking about Jiten Parmar of Aurum Capital, who's joining us today on the show from Pune. Aurum Capital is a Pune-based company which advises big HNIs and, of course, the promoters' money as well of Jitin and the partners. Jitin, thank you very much for your time today. What are you making of where we have got ourselves right now? From March lows, there was a very good recovery which has actually come in, and now we are kind of getting into a congestion zone. Global cues are also playing their part with the dollar index, which is falling and has recovered now. A lot of other things playing on the market, mind of the market. What are you making of the trends and the indicators?
Thanks, Ajaya, for inviting me to talk on this subject which I have spoken about extensively in various forums. So market cycles, so currently we are seeing that, economic cycle has been down, but the markets have been up. And that is a question you get all across the board from different people. And that is what market cycles are about. Is market cycles could be futuristic. They could be, predicting something into the future. And what I can make sense of this sharp run-up is that the economy was supposed to fall a lot, but I think it's better than expectations, and that's what has basically made the market go up. That's what the market is saying. If it will happen or not, we don't know. Markets can be wrong. But in this, rural India is what I think primarily responsible for the not so bad. It's like bad and ugly. It was supposed to be ugly, but I would say it is bad. So that's what I think is the reason why markets have gone up. We can keep on justifying it, but that's what the market is telling.
Jitin, now the last couple of days, there's a risk of second wave which has come in. Numbers are just not getting under control. And there are certain sections of strategists who believe that the recovery which had started from March lows is phasing out or is dulling out. Is market factoring that risk in your view, or they are completely looking far ahead, 2, 3 quarters, 4 quarters far ahead when recovery actually is stronger? Or does that risk is on the table also because of the US elections? What are you making of some of the risks which investors should be cognizant of?
Yeah, I think there is definitely, some sensitivity to the risk ahead. And it really depends on how this pandemic plays out. I mean, if there is a second wave and if we start having more lockdowns across the globe and in India also localized lockdowns, I think we might not sustain these levels, is what I think. But at the same time, if things start opening up a lot, I think, and if if you track some of the parameters in COVID, I mean, it's no sense to look at the aggregate number. I would say one should look at the recovery numbers, the mortality rates. The good thing is that they have come down. The recovery rate has increased and the mortality rate has consistently come down, which suggests that I think things are in control right now and improving. But we'll have to see what happens in the future if there is a second wave and so on. So it really depends a lot on how the economy opens up and how the pandemic shapes out.
But you would assign low probability of the markets visiting March lows or moderate probability. What is your assumption as far as markets going back to March lows is concerned?
I think I will assign a very low probability of the March 23rd low of around 7,500 on the Nifty. Just because, I think we have moved a lot further from there. And if you've seen that, we've had a K-shaped recovery in a lot of sectors. Some sectors have really done well. I mean, and they will aid, the overall market. And some have suffered. So basically, I think it's a fact that we have moved a lot from the March lows. I don't think it will be violated again.
Sure. Jitin, talk to us about your portfolio construction. If one were to take a view beyond 1 year, 1 to 3 year kind of a horizon, and you're constructing your portfolio, talk to us what kind of bets you have taken for medium term, medium to long term, high conviction, or even some of the contra bets which you have taken.
Yeah, so I think if one has a long-term view, I think one should be invested in equity. So long-term investors should definitely look at sectors, which where the valuations are in favor. I take a lot of contra bets in my portfolio construction. For example, I've looked, since last year, and I've talked it on ET now also previously. About telecom sector being one of the larger bets I've taken as a contra bet last year, and I think that is one sector listed for a long time, purely because of the consolidation, and I think we are seeing a very long-term trend in telecom. So that is one sector which has done well, and I think valuations of a lot of companies are in favor. So we should look at that sector. We'll continue to hold. Another is, we have positions in chemical, specialty chemicals, API, pharma. And these are some of these, for example, the chemical sector, I think we are looking at a very long-term growth possibility of what is happening in the sector. So that sector is something which we will continue to be invested in. API, pharma, I think that is where we are a bit concerned with the way the run-up has happened, and we are a bit alert on that. We have to understand that these companies have shown a lot of good numbers, but it will. I don't think it will be wise to basically annualize the Q1 margins, especially. We don't think it is sustainable, so we have to factor in that. And especially be wary of second run names in that sector. IT has done well, and I think again a lot of the steam is already out. So from this reward ratio, I don't think there is too much right now in that sector. One thing we think is sector rotation will keep on happening in this market, and one should be positioned to take advantage of that. Other sector which we like from a long-term perspective, or at least a 2-3 year perspective, is cement. One sector where we have taken contra bets is paper, which is basically right now not in a good situation, but valuations are extremely favorable. So if I take some time, but I think that is a sector which will evolve in the future.
Thanks very much for that. Jitin is still with us. Jitin, let's talk about the real estate space. You had, about 1.5 years back called out sliding of this sector way ahead. Do you see a bottom formation happening here? Does it look like value is emerging here? What would your call be here?
Yeah, so again, a very interesting sector. This sector has gone through a down cycle. Generally, real estate follows the 10-year cycle. And basically, the down cycle started somewhere around 2012. So based on that, I think 2022 is when we will see, full-blown revival. Again, this is based on past data. It might happen, the timelines might change. But one thing is that whatever happened in between 2002 and 2012 is not going to happen again. Maybe not in a lifetime. The kind of, asset price inflation in the real estate side, I don't think that is possible now for quite a while. So a lot of things have happened in the real estate. A lot of people have actually basically, a lot of unorganized builders have gone out of this segment, and it's become a corporatized sector. And so what I think is that, some of these large corporates will do well. because supply has reduced and there is obviously a demand for housing. So I think this augurs well. Again, margins of the past will definitely not be there. It is going to be a volume game, and anybody who has access to much lower cost of capital is the one who will be able to survive in this sector. So again, a very difficult sector for obvious reasons to invest in. But I think this sector can be looked at because valuations of a lot of companies are definitely in favor. So I would, selectively, look to invest in this sector over the next few months or over the next 1 year.
Let's talk about some of the export-oriented sectors. Pharma, chemicals you spoke about. I want to know what is the profitability profile looking like for IT. That is also something which you like in terms of margins. Do you think earnings-backed re-rating is likely to happen going forward in IT, and it is already underway?
So I think, there is not much room for further upsides, especially because, I think rupee has started appreciating, and a lot of the benefits derived were from work from home, I think, and eventually in the future we will start having a hybrid model because work from home also has its limitations. So the cost which probably would have come down in the Q1, I think that will not be sustainable for a lot of companies, not in only IT. I mean talking about even the pharma companies and so on.
Sure. All right, Jitin, we'll let you go on that one. Thanks so much for joining us today with your thoughts on the market landscape and how you're really approaching investing, going about looking for value for your clients right now.